Hello traders, and welcome back to the Forex Geek. In today's video we'll be talking about the Volatility Contraction Pattern, or VCP for short. The Volatility Contraction Pattern represents one of the most reliable technical formations in market analysis. So this pattern signals potential market breakouts by identifying specific periods of decreasing volatility followed by explosive price movements. So throughout this video, you will learn the exact components that make up a valid VCP setup, the critical timing elements for entries, and the precise methods to manage your positions. So understanding this pattern will enhance your ability to read market conditions and identify high probability setups across any time frame. So stay on to the end as we examine each element in detail, ensuring you can recognize and act on these patterns in your own trading. So let's get started. So first, what is the volatility contraction pattern? The VCP is a powerful technical analysis tool, like I said, and is used by traders to identify potential breakout opportunities in the stock market. So it was developed by Mark Minervini, a successful growth stock investor. The VCP is characterized by progressively tighter price ranges within a consolidation area, often following a strong upward move in a currency pair's price. So let's talk about the key components of the VCP. So the VCP consists of several critical elements, and the first is the initial strong move, which is this move you see right here, and it begins with a sharp strong move, and this is often volume supported, and it's followed by a consolidation. The next component is the consolidation. So following this initial move, you have the currency pair enters a consolidation phase where the price range begins to tighten, as you can see, and the next is the contraction. So the contraction components, here the currency pairs experience at least two lower volatility contractions after the initial move. Here we have three. You can see here we have three. Let me just join them together. But if you see two, then it's valid. You can see that contraction right there. Let me put this. This is for a bearish trend. Here we have four, and each contraction should be smaller than the previous one, indicating decreasing volatility. So volume behavior is the fourth component. During the contraction phases, trading volume tends to decrease, while it should increase significantly during the breakout. So during these phases, during this area, the volume decreases but increases during the breakout. Increases while coming down, decreases during the contraction, then increases during the breakout. Sometimes we have a retest, but the volume always increases during the breakout. So that is the volatility contraction pattern. Healthy patterns maintain higher lows in uptrends or lower highs in downtrends. So this characteristic shows that the dominant trend remains in control despite the decreased volatility, as you can see right here. This is a bearish example and this is a bullish example. So let's talk about trading strategies using the VCP. Here I'm just going to enter the charts to show you how you can use it. This is the GBP USD on the 1 hour time frame, and this is TradingView platform. So the most effective way to trade the VCP involves waiting for the completion of at least two contractions before considering entry positions. Your primary entry strategy should focus on the breakout from the final contraction, where price moves decisively above the last swing high or below the last swing low, which is, in this example, you can see that we had the contraction. This is the second. I had this breakout. This was a fake out. You can see the wick had this breakout, valid breakout, a retest. See, this breakout corresponds with the rise in volume right here. Had the retest and the continuation. Not all patterns give this retest, but most of them do give retest, and retest acts as a confirmation before the final move to the downside. But it doesn't work. It's not all of them that have this retest. So this is another example. This is for the bullish it's for the bullish VCP. Have the first one, you see price here, then that's the second one, had this fake out here, then push to the upside. Yeah, that's for the bullish VCP. So I'm just gonna come here. You can see this one. So the contraction started, had this, and this gave us multiple contractions, about 4 of them, or 5 even, before we had the breakout here. And you can see accompanied by massive volume right there. We see the decreasing volume during the contractions, and see the decreasing volume during the contractions right here. Then this massive breakout to the upside to continue this bullish trend. So that is the VCP. Let me just check if I'm gonna see another example. Okay, this is another example. We were bullish right here. This short-term bullish. See, we were bullish, and you can see price give us these deep retracements, and we're hoping for price to continue to the upside. And you can see this volatility contraction pattern right here. Let me just draw it out. Half price give us this contraction. This didn't get to that top. We had this. We had the breakout accompanied by massive volume. You can see that lesser volume right here during the contraction, and massive volume here at the breakout, which confirms our VCP pattern. So for conservative entries, you wait for a retest of the breakout level. This approach provides a better risk to reward ratio and confirms the strength of the breakout. So place your stop loss just below the last contraction low for long positions, or below the last contraction high for short positions. As you can see, you could enter at this breakout if you are not entering conservatively, and your stop loss could just be there, and the risk to reward ratio of 2, or you could target the resistance levels. So I'm just going to stick with the risk reward ratio of 2, and you can see that was how we got that trade right there. It's advisable you combine the VCP with key support and resistance levels for higher probability trades. When a VCP forms near major market levels, the breakout potential increases significantly. Like I said, while I was formulating this setup, I had to put the overall context into play. You can see we were bullish right here. This was a bullish trend right here, and we had this deep retracement to a support level, and we're looking to continue the bullish trend. Though price didn't let us continue it, but we had this volatility contraction pattern to support that narrative of price. And you can see price giving us the breakout for us to enter and benefit from this trade opportunity right here. So for exit strategies, implement a trailing stop method, or move your stop loss to break even after the price moves say 1.5 times the size of the final contraction, then trail it below each new swing low in uptrends, or above each new swing high in downtrends. So that is how you can use the VCP in your trades. Right, traders, you've come to the end of this video. If you found value in this analysis, hit the like button and subscribe to the channel. Make sure to turn on notifications to receive alerts about new technical analysis videos that will enhance your trading approach. Until next time, trade with discipline and protect your capital. Thank you.